Today we're going to talk about the weekly templates, the high and low of the day, and trap volume. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. It's the beginning of the week. We've had some huge moves last week, a ton of emails, a ton of questions. I'm going to walk through the entire week, an example template, the different types of scenarios that we can see each and every week, starting with our Monday, Tuesday initial balance, and then looking at peak formations each day, then looking at the 3-hour high and low that each session sets when they trade, and identifying a couple of key setups for either buying at the low of the week or buying after a stop hunt down low for the move back up with the trend, or perhaps selling up high for the move down in a downward template. We talked about 3 pushes to the low, 3 pushes to the high. I had one question from one gentleman. He said, I don't see any more of these one day, 2 day, 3 setups anymore. The market makers have figured that out. There's nothing new under the sun. The same things happen every week. And as the week unfolds, that becomes clearer and clearer. Some of those trade setups may not jump out at you straight away, but the more you look at these and look at the big picture and start stepping back and looking at peak formations, identifying where the trap volume is and the timings, things will start to make a lot more sense. So let's get started. So we talked about the initial balance Monday, Tuesday, and a large percentage of the time Monday and Tuesday will be the high or low of the week. Now it doesn't mean that on a Friday they can't take out the high or the low, but generally speaking, as the week starts to trade, Monday and Tuesday will often either be the extreme up top or down low, or they'll set the high and the low for the week, for the rest of the week to start trading off of and working into one side for a move back in the other direction, or for a breakout pullback continuation, or for a range bound market. Those are the 3 things we talk about that markets do. They break out, they fill more orders, and they continue. We call that the trend trade. They break out, they pull back and reverse, false break reversal. We'll often see a lot of false break stop hunts for the move back with the trend. We're going to look at a couple of great examples on the euro from last week, and we're going to look at a couple of great examples on the USD Swiss. Those markets are moving strongly, but on our British pound crosses, we had some textbook trade setups. And you're not going to see anything different this week. You're going to see the same types of setups, but it's important to identify the 3-hour highs and lows and recognizing if the market is trading inside of a peak formation from a previous session. So you could be looking at Asia and can't figure out why your trade didn't work, but meanwhile you're actually trading inside of the US session high and low. And we work from the high and the low. I work from the high and the low. Because why? Because we know above and below those areas, there's money. And everything in between, you might have a high of the week and a low of the week, and you're trading in here, when in reality, all they're doing is they're trapping volume. They hit the stops, and then they might continue the move. We talked about making sure when I'm trading, I'm looking to be on the outside, not the inside. The timings. We could be in a trend trade. The market could be jamming traders in and giving a type 3W. Traders are trying to short this market at the beginning of London when it's a trend trade for the continuation move. Little things, we're going to look at some very specific examples, but to come back and talk about our weekly template, Monday, Tuesday, as soon as Monday starts to trade, okay, the market may be going higher. So at some point we're going to get a high of the week. When Monday's trading, we've got a low and a high. Now that market may come back and move down as Monday continues to trade. So we now have a high of the week, and as we head into Tuesday, we may have a low of the week. The market will pull back inside. Once the market pulls back inside, if you're trading somewhere in here, unless you have a specific setup that came off of the low, okay, you're actually inside. And at some point when the next session opens, most likely they're going to hit the stops, even if they're going to go back up top, or they're going to jam traders in down low for the low of the week reversal. Now if it's a trend trade, If the market is going to trend and we get a low of the week put in place, if the market's going to trend, they might break out and pull back, but they'll stop hunt back up to the high of the day, maybe from the previous US session, for the sell signal up here, whether that's in London or in the US, for the move back down. The stop hunt will be up against the trend, but it won't be going anywhere. It'll be hitting the high of the day. And it will be in that 12 candle window, Asia, London, or New York. And typically speaking, that middle hour, okay, so the middle hour, if we're talking 8 to 11 p.m. for Asia, that means we're looking at 9 to 10. Okay, and I'm working on getting my new markers. Somebody commented I should be buying new ones. I'm going to be. Okay, so 3 to 4 a.m., 9 to 10 p.m., and 9 to 10 a.m. New York Eastern Standard Time. Okay, that's the hour of the equities open. So if there is no trade signal, like a second leg W or a second leg M, prior to this window, you can expect that they will either hit the stops or put the second leg in for the move, either to continue the trend or to reverse the market. Now, when we're looking for a reversal, traders need to understand if they're in a, for example, if their reversal trade is counter trend to the trend that's been happening over the last few days. So for example, we might get a Monday and a Tuesday with 3 peaks. Okay, so Monday, Tuesday, 2 days up, and they go into consolidation. And again, remember, we're going to identify trap volume in today's videos. We're going to go over that. But if they're heading into the next day in Asia underneath the peak formation, and the market drops down in London, and then in the US you're down here, your trade may be the stop hunt back into the trend, and then a reversal later in the US session to continue that move down. So we talked about Monday, Tuesday has now set the high of the week and the low of the week. We may see this market work 1 day, 2 days, 3 days down for the reversal into the low of the week. So traders have said, well, I see 1, 2, but I didn't see the 3. The 3 days can be down against the original initial balance. So again, Monday, Tuesday will often set the high and the low of the week in a large majority of the cases. But Monday and Tuesday, Friday, Monday, Tuesday, if they're in the same range, will often give you a thesis for how the rest of the week will unfold. They may start working into the high for a sell-off. They may break out and pull back and then continue the trend. So they may go 2 days up and then work down into Friday for the reversal long. These trades are the same every week, but you're not trying to trade every move. What I'm looking for are the setups that are the simple ones that stand out, that I can start to identify. They're working the high to sell off, or they're working the low to buy low, or it's a trend trade, or we're in a range-bound market. But again, the same principles apply. The 3-hour Asia high low. Do they pull it back inside and then work the low? Are they working the low? Is the market running away when London opens? If it is, you can assume that you're already in the middle of the move, and that at some point at the end of the London 3-hour window, or in that 4th hour, you'll get a reversal trade, or they're going to work the low, pull it back inside, and then in the US Open, hit the stops again. Remember, it's all about above and below. And everything, when the market goes back into a creeping trend, and when there's a creeping movement to that trend, they are building volume up, and at some point they will go to the highs or the lows of the peak formations to hit those stops. So we talked about structure. So the big picture is what's important. The second thing we talk about is the high and the low of the day. If you're getting filled on the insides of the highs and lows, that most likely is a trap. Most of these trades are at the high or at the low, especially after they've done a stop hunt. If you're not sure what the stop hunt is, we're going to look at trap volume today to identify the peak formations, but it will always be in this 12 candle window. That doesn't mean that the trade itself, they may hit the stops and they may extend the move into that 4th hour for a move back to the other side, or to the other side of where the trap volume peak is, which is typically the equities high and low. The next thing we look at are the timings. The round numbers. We talked about 50s and double zeros. Okay, The majority of the time, these trades are in 50 pip boxes, and over the course of the week, we may be doing 3 levels of rise for a 150 pip move. In a big week, pound New Zealand, pound Aussie, they may be doing 100 pip boxes, 00 to 00, for a 300 pip move. 3 levels of rise, 3 levels of fall. 50% retracements, 150 pips. Little things like that. We talk about the average stop hunt is 25 to 50 pips. Okay, so if you're expecting a long trade and the market in Asia goes up and they work it back in London for a sell high, they may go 50 pips. But they may also come back then in the US and continue the move. That's why we get the template where the market pulls back, continues its move, pulls back, continues its move, and on level 3 they'll work the peaks into the direction to carry traders in with the technical indicators and trend following systems. They might drag them up really high, chasing the move before they trap them, trap the volume up high, shift the market, go into consolidation, and then straight away drag out the traders and margin them out or increase their losses if they haven't been stopped out already. The same thing applies on the upside. If it's a trending market, you'll get breakouts, pullbacks that will sit on top of or just into the range of the breakout. So there is nothing new or hidden in this market, but it takes a degree of patience and understanding the importance of the timings. And the little creeping trends that traders often trade is the volume that they're trapping for a move, either before it could be in the right direction, but they still may drag traders up high, 1, 2, 3 down, and then real engulfment for the move back with the trend, or vice versa for the downward market. 1 bar stop engulfments by themselves, unless it's a level 3 or a 33 trade, I like to see the pin on the top or the pin on the bottom before I get into the market. An engulfment and a pin hammered together, bang. Especially if it's at the very low of the day or the high of the day. In the timings, in that 3-hour window, the only time I usually have a trade in that first hour is if it's a 33 trade. The third push into the peak formation on a third level, and vice versa for the long move. We had a couple great examples last week. Pound New Zealand gave textbook 33 trade, and we're going to see more of those. They're going to be here this week. The market isn't going to change. We're sitting in potentially some big trends, so it's important to understand to stay with the overall movement. That Monday, Tuesday can help us identify, are they working the high, are they working the low, are we in a trend week, or are we in a range-bound market? So let's take a look at some examples. Again, thank you for the great questions and all the feedback. Some of the feedback that people have has been for a lot of variety of questions, but again, breaking it down starting on Monday, high of the week, low of the week. We're looking for, if the market may be dragging traders up, for a sell high setup into a trend, especially on maybe the pound and the euro. We get a Monday, Tuesday, they work the low for the reversal back with the trend. That's potentially going to be a big week. Or they may work the high, trap traders up top, drag them down for 2 or 3 days, and resume the trend on a Friday. The data, the calendar can help us also identify some great setups after the news releases with the trend or with the stop hunt. And we'll look at some of the examples of those as well. But keep it simple, traders. Step back. If you start to look for the best trade setups and instead of trying to trade every swing, that's when you can start to identify key setups that you can scale in size and just focus on being consistent and patient and knowing that, for me, I'm working from the low and the high. We had some fantastic trades last week. Thank you for hitting the like button. Thanks for all the great comments. Keep them coming. And again, I'm working through the questions and emails. I've had a ton of emails, so I apologize if I haven't answered yours yet. Keep it simple. Let's start and look at some review from last week and get ready for this week. Have a great trading session. Have a great week, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading. We're looking at the weekly templates. We're looking at the high and the low of the day and the 3-hour windows, and we're looking at trapped volume. So on the euro, we're going to look at the euro. Some great examples this week. The market opens up Monday morning and immediately goes to the high of Friday. So we're technically still inside of the peak formation from Thursday's U.S. session high. So again, we know there's stops up top the market. Pay attention to the rollover. So we talked about one of the reasons I don't hold on to trades over the weekend. They drag traders up high, chasing the longs. Now, just again, pay particular attention to where the bulk of this volume is above that quarter level. They've got all this volume. Where does the market open up? Underneath of it. Hits the stops from the U.S. session. So again, there's our 3-hour high-low. Very important. We're inside of the previous London and U.S. session high-low. The market is back inside of the high and low on Friday. They work it up into the high. All this volume, this creeping trend, when the market opens, gets stopped out if they haven't closed their positions or taken profit. Immediately they go back up there and hit the stops on traders that were short. So traders have shorted this potentially heading into the close. They've opened it on a gap, got all the volume stopped out that was long at a worse fill than what they would have had a stop placed at because of the opening gap. They hit the high. They take traders in short on the open of the Asian 12 candle window. And again, the high and low in that 3-hour time frame. Now this is there, just to clarify, there is nothing here to dispute. This is price action generated information by the market. They are working the low. They pull it back inside at the end of the 3-hour window. They work the low, they pull it back and go right back to the high of the day at the open of the Europe 12 candle window. They hit the stops. So again, trapped volume down low. Hit it once, hit it twice, hit it 3 times, shift the market, engulfment, and stop hunt back up to the high of the day. Europe opens, comes down. Traders short this, but again, do you understand you're shorting a breakout on the first leg? But more importantly now, we have a high of the day, and in the London open, we open down low, they go back to the high of the day. So now we have a low of the day. We have a redrawn low of the day. We have a high of the day. Now, again, the question I ask myself every day is, am I up high or am I down low? Well, clearly, I'm at the high of the day. 1 push, 2 pushes, 1, 2, 3. That's a 33. An engulfment with a middle structure at what time? Heading into the U.S. session 12 candle window. The market closes below the middle structure on the last candle, the second last candle of the first hour, but the trade is up top. They've shorted the market, so as you head into the U.S. session, you're already in the middle of the move. The market opens up inside of the high and the low, but the trade was up top, meaning that the short trade, we talked about, don't counter trend the peak formation. They've put the low of the day in place, they put a high of the day in place, and then they worked the high. They worked the high, they engulfed it, shift the market, hit the stops on the bottom. Timings, high of the day, low of the day. If you're inside, you continue with the existing trade. So if you were doing anything in the U.S. session, you'd have to be short. Because why? There was a sell at the high of the day. We go into the next day's session. We have a high from London, and we have a low from the U.S. session. That's our high and our low. The market pulls back in the U.S. session. Gives us a breakout. We have a new low of the day in place. The market trends up to the high of the day at the end of the Asian 12 candle window. They hit the stops from the US sell, where they had their potentially had stops sitting above the high of the day. And what do? They go back down and hit the stops. They pull it back heading into our Europe London 12 candle window. And now, do you understand that you are inside of the high bull and the low bear? You're inside. When you see that you're inside when London opens up, traders are either going long, they've hit the stops on the shorts, they go down, they don't take out the low or the high on either side. We're looking for something down here or up here. Or we get a squeeze. They short the market into the low. They go down a second time. They pull it back and go down a third time. That's called working the low. 1 push, 2 push, 3 pushes without taking out the low of the day. They're not working into the high of the day like they did on the Monday. They're working into the low of the day. And we have our middle structure. At what time? It's our US session 12 candle window. The equities opens, hits the low, the redrawn lows of the day, hitting stops before pulling back. Inside engulfment, bullpen as the third candle. That's our type 2W. A W at the low of the day in the 12 candle window. This is a squeeze. But we also have our Monday, Tuesday initial balance. They were working into the low of the week. They went up and hit the stops. They get traders chasing the long. They come down and hit the stops. They hit the stops on the shorts. They jam them in 1 push, 2 push, 3 pushes. Type 2W from the low of the week. We put our measuring tool on our rectangle for our larger geometric structure. 2 times that range targets 1600. Now people have asked, what settings do I have? Just to repeat, I just took my Fibonacci tool. We'll open that up, and I just changed it to 100% expansions. In the first initial box, I have a 50%, but I've just changed that to 100 pip expansions. I look for 2 times the range. If it's an intraday pattern, I'll look for 1 full expansion. So, for example, it was a smaller pattern, but on the Monday, Tuesday, it could fail on the first level. But again, if that market moves strongly, as it did on the Tuesday, I'll be targeting 2 times the range. And again, think day 1, day 2. So we're in the first level now. The market has not put in a peak formation. It breaks. This is a continuation into the Asian high. That is not a pullback. That's a continuation from the US session into the Asian high. We get a pullback at the beginning of Europe. So we have our high of the day. We had an initial low from the close of the session. They come down once, and again we work off the high and the low. They pull it back. They hit the low of the day a second time. So London has a high of the day, which again our overall high is above that. And we have a redrawn low of the day between the middle hour, between 3 and 4 a.m. New York Eastern Standard Time. We now have a high and a low. They hit it a third time before engulfing. We'll just zoom in on that. Before an engulfment and a bullpen. Again, same combination as on the Tuesday. Same combination. 1 push, 2 push, 3 pushes into the low. Reversal, tweezers, bullpen, engulfment. It's the same setup. So when people say, where's your trades? That's the same trade. You're not going to get everyone. You're going to be looking at other markets. But this setup is, they're squeezing it into the low of the day. 1 push, 2 push, 3 pushes. 1 push, 2 push, 3 pushes. Engulfment, pin, hammer. Right back, continuing the trend. They go up to the second full expansion before pulling it back into consolidation. So again, we talked about trap volume. The volume was trapped down low. Okay? The volume is being caught chasing the move, but it's not going any lower. They're working it into the low, working it into the low. Even if you shorted this, when it got through to the low of the day, you need to go to break even. Why? Because I go to break even at any time a higher low is broken, because that's the most vulnerable point. If the market is going to complete the move and continue, it breaks through and continues the move. If it's a creeping trend, all of a sudden I'm thinking I'm getting jammed in for the reversal. But you notice the difference into the end of the US session. They're getting volume caught up high. 1 push, 2 push. So this upper box potentially maybe have trap volume. We have a low of London, right? So again, we're looking to see, are they trapping volume? The market goes into consolidation at the end of the session. So I talked about the high of the week and the low of the week. When you're looking at the Asian session, okay, you can see now clearly how you're inside of the high and the low. We can draw our lows on the swing low. Okay, so new peak formation that formed on the middle of the move. the market, when it went into towards the close of the U.S. session, took out the middle peak formation. They auctioned sideways in Asia. Let's redo this. Before, in that second 3-hour window, working the high, pulling it back, working the high, engulfment, 1, 2, 3. That 1, 2, 3 pattern, okay, traders can short this. If they may have shorted it. When it goes 1, 2, 3, though, you need to be aware they took out the middle structures, they've taken out the higher lows, but they also, when you see the 1, 2, 3, that's a stop hunt into the trap volume. The traders that have chased this move up long have just been stopped out if they haven't taken some money off the table. But then our next phase, the market doesn't work down, working into the low, it works back up into the high. 1 push, 2 push, 3 pushes, high bull. Okay, we talked about the high bull. Whenever you're inside on 2 pushes and they don't take out the high or the low and they go sideways into consolidation, they engulf the high bull, pin hammer, just heading into the U.S. session. That's a stop hunt to the low of the day. You can short that. But we're in an up market and traders can take money off, they can hold on to it, but as soon as that market pulled back inside at the equities open on that small bear candle with no follow through, you're back inside the low of the day. This 2-bar reversal is the same as a pin. That market continues its move right back through the high of the day. More importantly, though, do you understand that the trades happen at the low and the high of the day? That's a 33 setup. But the previous day, 3 pushes into the low, 3 pushes into the high, stop hunt to the low of the day, reversal, peak formation up at the top. We got our high bull. Okay, the market, again, we head into the next day. We've got our high of the day. Okay, high of the day. If I'm underneath the high, I'm waiting for one of those extremes to get hit because I know there's stops there. They're going to hit the stops. And until they put a new peak formation in, okay, these peaks inside are inside of the high and the low. So what is that doing? That's trapping people. Not to say that traders can't trade it. This is not a trade that I would want to be putting size on because I know I'm inside of the peak formations. So at some point, one of these is going to get broken. They put an Asian 3-hour high and low in place. The market comes down and works the low of the day but doesn't break through, pulls back up in the Europe Open. They hit the high of the day, but they stay inside. They come back down. 1 push. Again, we have our London high low. 1 push, 2 pushes, 3 pushes, taking out the low of the day. Engulfment reversal. Okay, we're at the low. It pulls back inside of the box of the low of the day. 1, 2, 3 in that first hour, hitting stops. Okay, on the last leg to the low. But notice also, they don't go below the swing high. This volume is trapped. They push down into that peak formation before, again, same pattern. Bear bull reversal with a bull candle and a pin on the bottom, same as the trade on Wednesday and Tuesday. They continue the move. Where's the money? There's definitely money up top. They've already hit the low of the day, and they come out and continue to move the market, and we see that market now going higher. We could be potentially putting a high of the week in for our current day, so we could see a Monday, Tuesday reversal off the low to continue the trend, but this could be trapping traders up high, chasing the move on the break of the high of Friday, chasing the trend trade. We've got a huge gap here. We could see 3 pushes into a peak formation for a move back down through the low of the day. Tuesday, Wednesday, reversal off of Friday's low or into Monday's range for a continuation of that trend long, but initially trapping traders chasing the move up high before hitting stops and either continuing the trend or working into a peak formation for a reversal, maybe a 2 or 3 day pullback. So again, high and low of the day, the weekly template, Keep it simple, traders. Stay to the outside. I look at, the timings. It's critical. First hour typically will be, if they haven't been a stop hunt, we'll look for a 33 at the higher low of the week. If the first hour is the stop hunt, then the second hour can be the trade. But I'm looking for a trade set up either at the higher low of the day, as long as it's outside of a previous peak formation. So keep it simple, traders. Hopefully you got value out of today's video. There's going to be some big trades this week. We have some great trending markets. Keep it simple, stay disciplined, stay focused, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.